Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alconin, along with Spencer Israel, and we have Gary Kaltbaum on the line. He's an investment advisor and author and one heck of a speaker. Gary, how you doing today?
I'm great, sir. Hope you had a happy Thanksgiving.
Yeah, ate a little bit too much. Didn't like the outcome of all the football games, but you can't change that. We're here. We're here at
Oh,
Monday, Cyber Monday. Gary, got to go back to our call on October 2nd. You were pounding the table here, or actually it was a little bit before October 2nd, pounding the table on the Bears side. What happened? What changed in the markets for you to flip your opinion?
well, we basically were saying the market was topping throughout April, May, June, July, and then we had the big top, rallied up. We came down and retested. Through all that, we were very, very bearish for obvious reasons, and there was a chance that the market would break the August and late September lows, and then we'd really head into a bear market. But there were 3 days in a row of 3 big reversal days, culminating with the October 2nd day, where I think that was it was the Friday where we came out with the crappy employment figures. The market was down 2 something, and we finished up 200. That simplicity, the definition is sellers are washed out, buyers for now have the upper hand, and we had to change track that day. And all we did was we went from being bearish as all heck, as you say, to we said our exact words in print were, we think a good low for now has been put in, and then we'll take it from here. And that's it. That was a good low. Things have improved, but I say the term better, but there's a lot that is acting well in this market, but there's a lot that's not acting well, and we'll get into it throughout the conversation.
Okay, so let's start about what's acting well.
Yeah, and by the way, let me just state one thing. Yes, markets can turn in a matter of 2 or 3 days of really strong action. You just have to identify them, and usually you do get them with some big, gigantic washout or reversal day, and that's what you got for those 3 days. So I just want to make sure everybody learns that lesson. It's very important. So here's my thought process right now. The market's very narrow, just like it was before it topped out in August. There is a select group of sectors that are working just like them, and a select group of stocks, and we just have to stay on top of those areas and avoid the others, and just realize in narrow markets, if the markets start getting distributed by the big boys, they could easier come down than markets that have good breadth and a good advanced decline. So just keep that in mind. And interesting enough, I'd say 90% of the same names that I liked in the April, May, June, July period are back again strong. First off, in the Dow, GE, Home Depot, Intel looks like it wants to break out here. Microsoft, McDonald's, Nike, Travelers, and Visa. You got some good-looking Dow stocks in here that show great technical charts. That can change tomorrow, but as of right now, they are definitely acting very, very well, and I do own a couple. And then, you've been hearing about this narrowness. Amazon, Facebook, Google, Netflix. Netflix looks like it wants to break out here also. The auto parts retailers, except for Advanced Auto Parts, AutoZone and O'Reilly Automotive, is acting great. Watch these 2 names because they just reported, had very good reaction. That's Monster, MNST, and Palo Alto Networks, PANW. By the way, I'm almost done with what's good. That's how I'll tell you how much narrow it is. Home Depot and Lowe's, and other home improvement type stuff like Beacon Roofing, BECN, and Masco. The defense stocks, because everybody likes a good war. The oil refiners, and then I have to start reaching. So that's really it for what I think is really great here. We're in the end-of-month window dressing now. We'll probably have a decent bias through at the end of December, and then we'll see what happens in January. But just remains very, very narrow and very, very stock and sector specific.
Gary, before we go to the ones that you're not liking the charts of, just
Yeah,
walk us back through that reversal on October 2nd here. I remember that day. We were going all over the place. And I remember even hurrying, talking to some of my buddies and talking trading floors that some institutions like were canceling all their buy orders underneath that they were waiting for the bottom of the world to come in. And just walk us through that day. It was a pretty big range. We
yeah.
traded 1917. We took out the previous day's low, 1890 and a quarter, and then we came back and we closed like gangbusters. Just walk us through that
Yeah,
day and how you describe that technical reversal.
yeah. First off, number one, we don't predict something like that happen, but we're able to react to it. There was no way of knowing that that's going to occur. But again, but nobody as bearish as I throughout the drop. Stay out, stay away. Bearish as all heck. Short the rallies. Just about every sector's toast. And then what ended up happening was about 3 days before I put out a little note, something to the effect of, let's hope it's like 1998. And in 1998, you had a vicious meltdown to the downside. You rallied up into moving averages and created I hate using the term double bottom, but that's exactly what happened in 98. And then we were off to the races. And all I did was outline the possibilities, but also stated I don't think it was going to happen. That's how bad the market was. But at all times, we want to be able to measure supply and demand, buyers and sellers, drown out all the noise and what people are saying in their opinions, and just watch what the big money's doing. And turns in the market, especially when they're in really bad shape, typically happen two ways. A, they'll just settle down for a few weeks at a certain area and just waffle around before stair-stepping up. Or B, which is the normality because markets are vicious, you get these big gigantic reversals that wash out all the people that got bearish at the lows. And typically that occurs on bad news, on worry. It typically occurs on a day where the market's down big and then finishes up. And just think of the physicality. Forget whether it's price or not. Make like there's a war and there's two armies. And then all of a sudden, at a certain level, one army says, enough, we are coming back, we're done, you can't sell us off anymore. And then they start to take over, and you see it in the price and you see it in the volume. And that's exactly, it wasn't just October 2nd. The 2 days prior, you also had reversal days near the lows. So it was really 3 days in a row, culminating with what I call Unemployment Friday. That was that bad day. And that pretty much told me that the worst was over. We rifled out a report that day as well as the weekend, not really knowing what was going to happen, but just in our study of precedent, and we've studied every bull and bear market going back 100 years, that's how markets typically will put in a low. And we don't know if it's the bottom or a bottom. We just have the feeling it's going to be a low for now. And we just put a good bottom for now, and so far so good. And what you really need to do is go back and study all these times. Go back to 98 and you'll see basically the same thing. And go back to other past times where the market stopped going down. You'll see very often a day where the market's down 200, it finishes up 150, and there's vicious volume. Also, during that week, there's nothing but bearishness. There's nothing but dire talk, end of the world. Harry Dent came out and called for another crash for the 400th time all over TV. That's the type of stuff you get after big drops and market to decided to turn. Now, we can get into why, but it doesn't matter. We already know. It's easy money city. Europe around that time announced that in December they're going to raise the amount of quantitative easing, and I think that's helped here. And, of course, our Fed, and who the hell knows what they're going to do.
Gary, what would you say to somebody that's kind of like they sat out this year, they're looking to redeploy some assets? Man, it sure looks like you missed the big opportunity in August and maybe again in October. Sitting up here near all-time highs. What do you think about someone just throwing in the towel, going in full bore into the stock market at this level? You can't fight it like the army retreating. I'm giving in here at this level. I'm going in. Whatever, the market just goes higher. We're going to take out new highs in December. Then you have
Yeah.
the January effect. Another thing I read in Barron's over the weekend is, there's been some theories that, okay, well, the interest rates go up, people are gonna pull their money out of the bond market. Well, where's it going to go? It's going to go into the stock
Yeah.
market, and we're going to have this tremendous melt up. And you got to get in now. You're going to miss the move to what? Where's the Dow at here?
Yeah. First
17,
off, I tell
20,000.
people don't think so much. All this talk about bond market this, bond market that, money going here. You let the market decide. And I got to tell you, I think last week we started getting the January effect early, as finally the small caps starting to outperform a little bit. Here's the good news for those people who sat this year out. Most of the market isn't up. The only thing that's really up decently is the Nasdaq 100, and that's based on 2 to 4 stocks. The S&P I think is up a couple. Dow's flat. The Russell's still down I think a little bit. And I can tell you, areas of the market in the world are still down on the year, so no big deal. What I just advise people is continually stay on where the relative strength in the market is, and if things change, make sure you stop out without having big losses. I know a lot of hedge funds that are sitting in Valiant Pharmaceuticals and never sold. I know a ton of hedge funds that still own commodities in the last 12 months that are getting killed. Just make sure if you're wrong small, and realize this is not an easy market. This is a pain in the rear market that's driving everybody up the wall, and it has not been an easy year by any stretch of the imagination. You had a mini crash in August, and we're finally maybe getting a little life. I'm not so sure of that, and I just think you be very careful. I can tell you, as I stated, the things that are working, by my count, and I have my own little proprietary 3,000 stocks scan that I do every a few times a week. 65% of the market is still in bad shape. Only about 35 to me is in good shape, and of the 35, only about 10 to me is really bullish. So I think if we're going to get going here to the upside, I think there'll be plenty of opportunity. Just work hard, study at it. I would get Investors Business Daily every day and look where the leadership sectors and stocks are. I named a bunch of them, and always be ready for changes just in case, and we'll see how it goes.
What should investors be leery of, though? We got to get to that. We're on the line with Gary Kaltbaum. He's an investment advisor and author. GaryK.com. Gary, what are you looking for? What is going to break down? What's worrying you in this stock market?
Well, let me just say this: and it's actually surprising, but the commodities remain in a bear market. All rallies have been snuffed out, and that goes for gold, silver, fertilizers, commodities, commodity countries, and the like, and I would still avoid that for right now. I'd actually avoid most of the biotechs and healthcare. They topped out recently and ain't going anywhere. The gaming stocks, a ton of retail stocks are acting like we're going into a depression. All one has to go look at the Gap and Macy's and Men's Warehouse. I mean, holy heck, to how weak those areas are. So I still think you just be careful there, and hopefully they'll change and get better, but as of right now, it hasn't. And then you got things that are what I call mixed. Financials, they're okay, but nothing really doing there. That no really need to touch them. Semiconductors, mixed, nothing really doing there except there's been some buyouts. And the one area that's been dead in the water that I am watching is the energy stocks, in that they are really starting to outperform the commodity over the last few weeks and are holding the lows. So if energy stocks start to get going, I'm going to be looking at those. But after that, I'm not seeing too much. And by the way, the transports are acting poorly also. So I just think you got to be very careful, very stock and sector specific, or you're going to lose money regardless whether the indices rally up a little more or not.
All right, words of caution after this nice rally coming from Gary Kaltbaum, investment advisor, president of Kaltbaum Capital Management. Hey, will you send me an email when you get the next reversal to the downside here?
Well, let me just tell you how the next downside is going to happen if it does. you're going to get a lot of bullishness, everybody talking instead of the world ending, everything's going to be great. And then you're going to have one or two monster down days where everybody's going to say is everything's okay, and that's going to be the start of it. If it's going to happen, it's going to be in January, as all the strategists are going to come out and call for 15% next year, and everything's great. So for me, I think we're okay into the end of this year. But come January, I think I'm going to be careful, and again, be very, very stock selective. And by the way, earnings and sales stink, so I don't know how the market's going to really get going with that, unless our central bank, which is teasing the raising of rates, turns tail and does the opposite. So it's going to be an interesting December and January. Just stick to what's working, keep your stops in place, and hopefully everything's going to be a-okay.
All right, I'm going to have Spencer get you on here in early January, see if the scenario plays out. Gary Kaltbaum, investment advisor and author, president of Kaltbaum Capital Management, and author of the book, The Investor's Edge. Gary, always enjoy having you on. We'll speak to you again soon.
Thank you, sir. Have a great day.